Hi everyone, it's Ben Manzo, financial consultant with IG Wealth Management. I hope you're staying cool in this humidity and enjoying the long weekend. Today I thought I'd talk to you today about 5 key reasons why to consider insurance. And before I begin, I wanted to share some stats. $16.7 billion worth of insurance benefits were paid out in Toronto in 2014, $92 billion in Canada. You can see here that most of the claims submitted were approved. So when you purchase insurance and you submit a claim, most of the time it's getting approved. Now, obviously, some conditions will apply, but most of the time it's getting approved. Largest policy in Canada last year was $61 million joint last to die. The premium was $4 million per year. So not to worry, because there are insurance policies that are much cheaper, more affordable. It really depends on your own unique needs. And so you can see, though, that insurance policies can be quite high at $61 million in terms of a death benefit. 692,000 policies were purchased in 2015, representing a very small percentage of the Canadian population. So, why go for insurance? So one reason is to manage risk. Could be used for income replacement. Maybe you have a mortgage, you want to protect that mortgage. You don't have bank insurance, creditor insurance. But maybe you want to look at your disability, your critical illness, or life policy. And oftentimes I'm asked, why would I convert my term insurance policy? So term insurance is based on life. It's over a number of years. And you do have the option to convert into what's known as a permanent policy, which will last you all the way through life. It's considered another asset class within your investment portfolio, and it can be used for other reasons as listed here on the slide. Another reason is, enhancing income. Insured annuity. So an annuity, it provides you a stream of income. Combined with an insurance policy, you get the insured annuity. Maybe perhaps, you want to provide charitable gifting. Another reason is, caring for your health, but also caring for youth. And here you can see I provided an illustration for a $100,000 benefit for a child, where the premium is $23 a year. Very inexpensive. However, as kids age and as individuals age, it becomes a little harder to get insurance at a very cheap rate. So now is the time, if you don't have insurance, please look at your options. Fourth reason, and arguably the most important, is minimizing tax. So this can help ensure your investments, your pension, without having to rely on savings. Capital gains, tax liability, this can provide a shield. Various techniques such as estate freeze, and I'm providing an example here where you can see an individual has a business where they're exposed to $500,000 of capital gains tax. So option one is pay the amount of tax outright on the gain, or pay less. I don't know about you, but I'm paying less. And how do we do this? It's through the estate freeze, where there is a tax credit of $343,000. Tax savings is about $147,000, providing a net cost of about $113,000 and change, a 77% reduction from option one of paying the tax on $500,000. Fifth reason is preserving a legacy. So things like estate bond, maybe there's a cottage succession. So oftentimes I'm hearing about, how do I minimize the tax on, gifting a cottage to my kids or grandkids. And whole life for grandchildren. So, let's say that the RSP is spoken for, meaning that it's been fully contributed on an annual basis. What other alternatives do grandparents have, or parents? Well, there's a whole life policy. So provide an example here of mom and dad. They have surplus cash. Dad has a pension. There's about $50,000 coming in additional savings from various sources. There's also income from rental properties. They're conservative investors. Dad's a smoker, mom's not. So we have a couple of options. One is looking at an estate bond. So this really is a bond that will help executors fund beneficiaries' needs through, maybe it's a joint annuity. In this example, it's a ladder GIC, but keep in mind, GICs are exposed to inflation risk. But I really like option two, which is really looking at a whole life policy. You can see here the premium is $50,000 a year. I know it seems quite sizable in terms of the cost, but again, it really depends on affordability. You can look at a policy that's cheaper. But I wanted to highlight, the circles at the bottom. So you can see right year 21, it's earned a rate of return of 4.15, and in previous years it was higher. But you can see here the other circle to the right of 4.15 is a rate of 8.94. So that would be, in order to earn 4.15 within the whole life policy, you'd have to earn almost 9% outside of the policy. And that is hard to come by, especially with volatile markets. So I'll leave you with this quote: worst thing than being blind is having sight but no vision. Please let me take a look at your situation. Maybe there's some blind spots that apply, but certainly I'd be more than happy to help out and provide my expertise and my guidance. Thank you so much. I wish you nothing but the best. Please do reach out to me. I can be found on social media. Have yourself a great day. Take care.